welcome along to tonight's presentation. Really tonight we're going to cover what's happening in the Australian property market. We're really going to focus on the Southeast Queensland corridor, and I'm very privileged to have a guest speaker on tonight, a wealth creation and business coach, and Don Hull will be joining me. And I'd really like everyone to take the advantage of that information that Don's going to share with us about, that creating wealth and having that plan and that thinking outside the square and looking to build their wealth through real estate. So really looking to forward to Don's experience and wealth of knowledge. And now is going to be an author going into 2024. Some exciting news. I've been working with Don for probably around 8 or 9 years now. And, it brings a lot of value to our clients. Okay, the agenda that we're going to cover off tonight. As I mentioned, I'm going to introduce Don Ha very shortly. He's going to go through his journey through a company owner and a business owner and a property owner, investor. Like everything in life, when you want to achieve success, the best way of achieving success is having a coach, a trainer. My niece recently qualified for the coming Olympic Games in the 100-meter sprints and for representing New Zealand, and she's had a coach for many, many years. And if you look at most successful business owners, most successful property owners, majority of sports stars, they've all had coaches and ongoing support, and they really see the value of that. So having that input from Don Ha tonight will be very valuable. Then we're going to come into the property market in Australia, some very positive news that's come out of the market over the last 12 months, and more importantly, going forward, what's going to happen over the next few years. We're really focusing on tonight's presentation on the information around the Southeast Queensland, Greater Brisbane corridor, leading up to the Olympic Games in 9 years' time. We're going to show the reasons for the positive cash flow that's going to come from these types of properties. We're going to cover these higher income type properties in a bit of detail, and then we're going to wrap up with a Q&A. So we're going to have a lot of data, a lot of statistics. We're actually going to have a cash flow forecast in tonight's presentation, so you can really see the numbers. When you're buying property for investment purposes, it's really about the cash flow and the numbers. Take the emotion out of it and base your decisions on facts and figures. So I'm just admitting everyone into the room now. We've got a great audience tonight. So now I'd like to hand over to Don. And as I said, I'm very privileged to have Don tonight in presentation and explaining his journey. Over to you, Don.
Right. Thank you, Jeff. Thank you, everyone, for attending. We've got a mix of audience tonight. We have Jeff from Queensland, and I'm from Auckland, and I can see that Morris Short is in Sydney there, and then some people in Victoria, and then some people from New Zealand. This is the power of technology, that you can just be at home and be able to watch an education seminar and then learn from it. I have some exciting news to share with you, that tonight we've got about 19 or so people booked for this property webinar, and it's free to you, and it's all our time and our expertise. But it's quite funny that people can come to this webinar tonight at no commitment at all. But when I run a property coaching seminar, how to become a millionaire, how to build $1 million property portfolio, how to create cash flow, and how to retire rich, it's a non-selling seminar versus and the outcome is exactly the same, but I get like 240 people this Sunday that came to our education seminar, but in the end, it was about properties. So I find it quite interesting that the market right now is hungry for information. I think COVID has locked us down for too long, and between Australia and New Zealand, a lot of the information is now hidden, is not given to us. So I find that the education sector is now hungry for information. Wow, you got us tonight. This is a completely different seminar for you, but it's supplying you more information about properties and how to create wealth. So I see the behavior that has changed prior to COVID, and then now COVID happened. And I call it the society has dumbed down, to be perfectly blunt, forget my language. Okay. I don't know why. What had happened here was that no one cares anymore. No one wants to do things anymore. everybody complains about cost of living, and everybody blames the government. But it is up to us to change our position. The government's not going to change your position. They might give you a $34 tax increase per week. That's nothing. That's not going to change anything. But they're saying that you get $34 a week, collectively it's 800 million to the public. Well, $34 buys you like 6 cups of coffee. Big deal. They just want to make themselves feel good by saying that, hey, my new government is 800 million giving back to the family. I reckon they should give 8 billion back to the family. That's better. So it is up to you to make your billions. It's up to you to make your millions. You run your own government. Forget about your government. Forget about our government. You have to run your own government, because it is up to you to change your position, change your finance, change your outcome, change your mindset, change your action plan. Then your financial position will change. Because $34 or $100 a week, trust me, you go to your boss now and say, give me $100 a week pay rise. I don't think it's going to change anything. Why? It's going to take 30% of the tax. You get $70. You just end up drinking another 4 or 5 beers, having another extra smoke, maybe buy your mates a cup of coffee. It's gone again. So that is not going to change your position. Run your own government. Just a background about myself, so you know. I started real estate in 1994, but back to that, I came here in New Zealand when I was 12 years as a refugee from Vietnam. My family was been supported by nice sponsors in New Zealand. And then in 1994, I got into real estate. In my first year, I sold 86 properties. No experience, I sold 86 properties. I bought my first home in 1991. And then now I sold multi-billion dollars of property now over my career. And my company now, Remax New Zealand, when I took that over in 2020, the first year it sold was 400 million. It's been around New Zealand for 19 years. On my first year, taking over as a master franchise, as a CEO, I bought the company up to 750 million. And in 2020, for the first time, Remax New Zealand done over $1 billion turnover. So I have the experience of wealth in business and properties. And now, today, we also expand into Fiji as well. We own Remax Master Franchise for Fiji. So I have gone through my experience. And here, to go back to 1980, on the left of your screen, you can see my very first home from the government. There's 8 of us in the family. I'm the second youngest, and we rent this government house for $120 a week. And you know, there's 3 of us in one room. We had bunk beds. And that's how tough it was. You always run out of hot water because there's only one hot water cylinder for 8 people in the family. So I know what it means to struggle. And this is what I mean to say, you've got to run your own government, because the government will give us $120 to live in this house with 8 people. That's what the government give us. If we rely on the government welfare, we're still going to be renting that house today. But within 4 years, our family went and bought our very first home right in the middle there. We moved areas from the roughest area in South Auckland. We moved to Babatoitoi. And then I grew up in this area. I went to school. I was very good at school. I failed 5th form, 6th form. But I had determination to become a landlord in a very early age. So when I was 22, the house under my right screen, it's my very first home that I purchased for $42,000. And I thought that I was going to get married, have kids, own a bakery, and live in this house forever. That was my dream home, $42,000. And I had a mortgage of about $30,000. I had $12,000 deposit. And I was so scared of owing the bank $30,000. Can you believe it? But today, that house is what, 1.5 million now, some 30 years later. It's still the same house, same window, same roof, same cladding, except the land is now probably worth more than the house. So that's probably double in value every 10 years. Well, you work it out, 42,991 today is 1.5 million. So probably always double in value every 10 years through our state. And it happens between here and Australia. Okay, so now that I own the master franchise for Remax New Zealand, Remax Australia is our great big brother, you call it. They have 750 50 members nationwide and 70 offices nationwide. So RE/MAX World has got 145,000 agents over 115 countries. Every 4 minutes around the world, RE/MAX sells 4 properties every minute, 4 properties per minute. So we're part of this global brand with that amazing balloon there that you travel around the world, you will see it. So this is our connection with RE/MAX Australia, RE/MAX New Zealand, RE/MAX Pacific, and RE/MAX Global. So if you travel anywhere in the world, you or your children that need some employment in certain countries, you need a contact, or you just simply go to an office somewhere where you get lost and you say, I know Don Ha from Australia, New Zealand RE/MAX, or I know Morris from RE/MAX Sydney. With that one sentence alone, that could make you an instant friend, and that could help you to guide you somewhere in Turkey that you get lost, because you are part of our brand and part of our extended family. So that's what we can be able to offer you, and that is my experience. So now I hand you over to Jeff. I know Jeff now for over 8 years. He's ex-Kiwi, lives in Queensland, and we've been going backward and forward between the two countries doing seminars, and even to Sydney as well. And a lot of our clients has bought off Jeff, and he just knows the area really well. So we're really lucky to have Jeff to know all this market. Jeff himself presents a lot of webinar all over Australia, and he does it all the time. You see him on LinkedIn and Facebook. So we're quite lucky to have Jeff to share all these data nationwide in Australia and what's good for you to buy and where you should be buying. So yeah, over to you, Jeff.
Thank you, Don. Thanks for the presentation. I hope everyone got a lot out of that. Just that point of starting somewhere. So if you're looking to get into the property ladder or your first investment property, the biggest thing is to look at the numbers, look at the facts, make a decision. Listen to people that have been there, been successful, like Don, and use that knowledge and that wealth and that advice to grow your, property portfolio. We're actually going to cover some real figures tonight. So some of the reasons why only 20% of the population in Australia own investment properties. So not seeking advice from successful people. Don't take your property advice from an accountant or someone that doesn't own or invest in property, or the media that is very negative. Look at the real facts. Look at people that have been there, done that, been very successful through property, and take advice from them. Success does leave clues. So again, if you're following those coaches, those experts in the industry, and relying on the facts and the figures. So if you're taking advice from anyone, just ask for the facts and figures to back those statements up. Qualified property people, very important in the industry. People that own property themselves, investing in real estate, because they are the ones that will give you that right guidance, and you can learn from their experience. So buying your own home is largely based on emotion and to suit your lifestyle or your family's lifestyle. Buying the investment property is really about the figures and the numbers and the statistics. So fall in love with the numbers. I've always personally been very big on investment property, much like Don started. Had my first home and bought my first property investment property within a few years, and didn't look back from that. So it was just about taking that step, that leap of faith, even though at the time my family was telling me not to spend 20,000 on a deposit for an investment property. That was the right thing to do, was getting into the investment property market. So what causes property values to increase? So largely supply versus demand. So demographics, changing demographics. These are some of the big changes that are coming to Australia, and especially Southeast Queensland, that we're going to cover tonight. Future population growth. Australia's got very strong population growth. Immigration is huge at the moment. Interstate migration coming into Greater Brisbane region is very strong, strongest region in Australia, and that's really going to cause that that demand for property and the wealth of the nation. And when you look at right around the global world, there's a lot of reasons why there's a lot of wealthy people coming into Australia. It's a very safe, secure. Our political environment is very stable, and our financial markets are pretty strong when you look at the rest of the world. So we're in a very good position to take advantage of property market going forward. So the latest data coming out of CoreLogic, RP data of the end of November, and very strong property market data right around Australia in most regions. So you see over the last month, over the last quarter and annually, very strong returns. And we're talking about Brisbane tonight. 1.3% growth in a month is extremely strong. 3.9% over the last 3 months, and 10.7% over the last 12 months. So if you look at a $800,000 property, that's an $80,000 value increase. $80,000 in the hand, and imagine trying to save that as Don mentioned earlier. And we are in a higher inflation environment. The cost of living has gone up, so simply relying on wages to fund our retirement is going to be very challenging for most people on the average sort of incomes. This growth on this property market over the long term can certainly help towards your retirement assets. So very strong growth, very strong numbers. Again, we always go back to the data. But population of Australia. So it was forecast that we were going to have 400,000 new residents in Australia this calendar year. I think now they're forecasting expecting the total to be by the end of the month about 600,000 into Australia in 12 months. Really the first year that we've come out of COVID, and we're operating internationally is phenomenal. And when you look at the growth in the states, in Queensland, you can see Queensland there, 2% annual growth. The fastest growing region in Australia. So that's supply and demand. These are the facts and figures showing you why Queensland is really showing that strong property growth, not only in the last 12 months, but going forward, over the next 10 years. Rental incomes. So we're obviously paying a bit more interest rates than we were, 12 months ago. That's just a fact of life. We are still at a historically low interest rates, much lower than I've been through most of my investing journey. But going forward, you look at the rental forecasts over the next 12 months, very strong. So for anyone owning rental property or getting into rental property, these are fantastic numbers to have. So again, Brisbane forecasting about 7 to 10% rental income. Just last week, one of my own investment properties increased the rent by 10%. So what it was. So, that's real figures, real data.
I just want to comment on that rental increase, Jeff, because going back 6 years ago, the rental income that we bought the property or apartments over the Gold Coast of Brisbane, and for example, you buy a $500,000 property, your rental is like $450. So it's not quite a dollar for a dollar. And it remained like that for quite some time. But for the last 1 or 2 years, all of a sudden, if you buy a $600,000 property, you're getting $750 rent or more. So the rent that has increased within the space of 12 months has been faster than, say, going back 6 years ago in 4 years. So the reason why is the population has increased in Australia so sharply, and Australia now needs a $1.2 million extra dwelling, which is crazy, 1.2 million. So all of a sudden, this rent increase is outperforming New Zealand rent increase now, which is really exciting.
It is. Thanks for the input, Tom. Going forward was the forecast for the Greater Brisbane region, and some real strong forecasts. Of course, they're only forecasts, but we've already showing you the median prices when we looked at the CoreLogic data. Sydney and Melbourne have traditionally led the Australian property market, and now our Brisbane's median price is on par with Melbourne. So we've already caught up to Melbourne in the median price. So that just shows you, when you're looking to invest, you want to invest in areas that are growing, where there's demand, where there's population growth, and that will give you that capital growth. So some very positive news coming out about the Greater Brisbane region. Of course, one of the big drivers is the Olympic Games coming up in 9 years' time. And it's not the fact of just the Olympic Games, but it's all the infrastructure that's going in to create the venues, the accommodation, all the workers, and that's really driving the population growth. So for anyone that is watching tonight that lives in the Greater Brisbane region, there's more cars on the road, more traffic, more delays. So, if you get stuck in traffic, that's not a great experience. The way to look at it is, hey, if I've got an investment property, these people need to buy or rent somewhere. So that's showing me that there's more demand than supply. That's going to mean my house, my home that I live in, or my investment property is going to go up in value. So federal government there forecasting that Queensland's population growth to be expected by grow more than 16% by 2032. So not just the growth over the last 12 months, which has been phenomenal, but more importantly, the growth over the next 9 years. And that's leading to this, capital growth, strong growth that we've seen. $7 billion of infrastructure going in to cater for the Olympic Games and the Paralympic Games as well. So massive infrastructure. So we're importing workers into the area, more materials, supply companies, engineering, drafting, finance. All this is going into the Greater Brisbane economy, and it's really driving this strong demand for property, and hence the reason why we are seeing that huge rental increases of that 7 to 10% forecast. The thing about the Olympic Games as well, it's not just focused on the centre of Brisbane or the Gold Coast or the Sunshine Coast. The venues are going to be all around the southeast Queensland corridor. So I did have one investor client the other week looking to buy near the Commonwealth Olympic Games venue, but there's simply not one venue. So the Queensland government's done a very smart thing and spread all the venues out there. So they're right around the Greater Brisbane region. So wherever you are in the southeast Queensland or got an investment property, there'll be some growth in those infrastructure going into those areas. And we saw that if you look back at to the 2000 Olympic Games in Sydney, that Sydney market really grew when you look back at the figures from the late 90s to the early 2000s. And that was all driven by that infrastructure growth going into the New South Wales or Greater Sydney region. So similar sort of things happening to the Brisbane property market. So we talked earlier about supply and demand. Very important to look at the figures. And here's the real facts. So if you look at the number of new building approvals, number of house completions, a number of new build starts over the last 12 months, all down. So we're building less new homes. And we've got the green line as this great, massive population growth.
I just want to comment on that graph for a second there. The New Zealand market is very similar to this graph that the consents are really down. And the reason for that is right now, as you know, the finance market is pretty hard and a lot of construction companies are going out of business because of overrun costs and they're not making any profit. So the finance company are now forcing all of these people for the past 15 months to pay up. So in other words, if you've got a lot of stock, you've got to sell up, you've got to discount them, and you've got to pay back the finance company. So now what we're experiencing is all of a sudden the finance company now got too much money back from forcing all our developers and our builders to sell up. And then our developer then will say, well, I'm not going to do any more consents because I'm not making any money. Why should I? So the role reverses itself right now. The finance company has now got a lot of money back, and then there's no more borrowing for construction loans because no one is borrowing because they say, I'm not making profit, I'm not building it. So for the next 12 months or less, all of the existing stock will be gone, will be finished. And then there'll be a gap in the market where for 12 to 14 months, it's not enough stock. Then it will create the price increase again. So that is the trend right now that I had a great opportunity to talk to a financier this morning. He was giving me exactly the comment, and I just thought, you got it at 1:30 p.m. I'm passing on to you right now, and the trend between here and Australia, it's identical. So this is the best time for you to get into it.
Yeah, really good point, Don. I just had a recent case study myself. One of my friends in my sports group looking to buy an apartment on the Gold Coast. And over the last 3 years, had the deposit ready to go. Wasn't sure coming out of COVID. Listened to the negative press about the news, property markets collapsing and mortgage cliffs and all that. And now trying to buy into that market, they're going to pay for that apartment that was about 300,000. They're going to pay 600,000 for that same apartment in under 3 years. Yep. And exactly what you said, Don. We're building less new apartments. The strong population growth. The developers aren't building new stock as much, so that's why the growth, even in apartments, has been, very strong. And there's competition. Got another friend in my run group, her daughter's trying to buy into the entry-level apartment on the Gold Coast, and every property she goes and looks at is being outbid. She's offering above the valuation estimate, still getting well outbid. So there's a lot of pent-up demand for property. So the point we can take from that is that the longer we wait, move into the market, the more we're going to pay for property.
Yeah.
This is a really interesting statistic, and even I was sort of really blown away by the statistics. So traditionally, the sort of New South Wales, Victorian economies have been very, very strong, really led the Australian property market. CommSec early this year said Queensland is the best performing state economy for the first ever time. So this is massive. So just
Queensland is number one on the map there.
Yeah.
Just in case that no one knows. Quite a big area, isn't it?
It is a big area, and this is phenomenal. So you talk about, listen to people, experts, look at the facts, look at the data. Data tells a real picture. This is real data. CommSec commenting on the Queensland state of the Queensland economy, and that's because all the infrastructure going in, this population growth, it's really stimulating the Queensland economy. And you only need to go out for dinner or go to the coffee shop and see the queues of people trying to buy produce, get coffees, go to restaurants. The Queensland economy is performing, very strongly. Vacancy rates. Vacancy rates are extremely important. So I'll just explain that for anyone new to property investment. So vacancy rates are expressed as a percentage. So historically, a 3% vacancy rate essentially means for every 100 properties listed for rent, there's about 3 that are vacant. So they consider a 3% vacancy rate a very tight rental market because there's always obviously people coming and going. If you're up at that 7, 8, 10% vacancy rate, that's very high. So 3% is considered a sort of standard. Greater Brisbane regions now, most areas are under around that 1% vacancy rate, which is extremely low. And for anyone watching tonight that's got an investment property or tried to rent a property recently, in Brisbane, the Greater Brisbane region, I'm sure you've experienced that. And we hear stories, we see it on the news every night, very unfortunate circumstances, people having to move out of properties, being forced to share families in one room. Go back to what you talked about, Don, when you moved over to New Zealand, crammed into one house, 2 families having to share just because of the cost. But for everyone that's having to move out of the Brisbane region for the cost of living here, there's probably 2 people ready to move into that property. So again, just another confidence-inspiring fact. If you're looking to get into property investment and not sure, sitting on the fence, these statistics really tell the big picture. Just another graph there. A very simple graph. Yellow and orange is the number of dwelling approvals for new builds, well down on what it was, and the line in blue is the massive population growth we've got in the Queensland region. So just another fact there. So we talked earlier at the start of the presentation about relying on information, stats, real figures, and we should take advice from. And would we be take advice from people that are doing it themselves? So this is just a few case studies of clients, family that have gone ahead and invested in real estate, built new properties, and got some fantastic returns. So again, it's real data. So the property on the left is a dual occupancy property. Purchase price was just under 600,000, just over 5 years ago now. Property next door recently sold for 850,000. So 250,000 in 5 years is a phenomenal return. But more importantly is the rental return. So when I built this property myself for my own portfolio, the rental income from day one was 775 a week combined for the 2 residences. As I said, just done a new lease agreement on one of the units here, and my current rental income is 1,060 per week. So again, you're making a decision today, and the return might take 2 or 3 years to see those fantastic returns, but that's a very positive cash flow property just by having that.
More importantly, Jeff, look at the profit. In 3 years, $309,600 in gain. My question is, for the audience, is if you were working, husband and wife, or would you save 309,000 in 3 years? That is the truth of it. If you own a property, positive cash flow, and the tenant makes you 309,000. My question is, if you can do it, if not, why not?
Great advice. Yeah, totally. And this property, it was actually built it for my daughter. And she couldn't, and her at the time the mortgage payments were less than rent, and she couldn't get back into the property market if she'd waited the 3 years. So most people on the average income, there's no way, as you said, Don, they could save. I've never been able to save that amount of money in that time. property here for that we built. So as Don mentioned at the start of the presentation, we have had a long relationship over 8 or 9 years now. A few years ago, Don come to me with for some advice on his family. We built a brand new 4-bedroom home for a Kiwi investor. Purchase price 465,000. Now it's with the last CoreLogic valuation was 705, so 240,000 profit. And also a massive rental increase as well. So just real data, and we talked earlier, look at the real facts. These are the real facts. Another case of a new home that I built for a first home buyer, got into the market. It wasn't that long ago, just probably about 2.5 years ago, 520,000. I did the CoreLogic valuation, now 740, so 220,000 profit. Amazing. Another dual occupancy property for recently a Sydney investor. So we're talking about real case studies, real numbers. So this property was purchased on contract as a house and land for a dual occupancy for 692,650 in the Logan region. It's now worth about 800,000 plus. But more importantly, the rental income. So when we did the signed the contract for the build, which was probably about 2 and a bit years ago now, the rental appraisal letter was $700 a week. Took a little bit of time for the land to register. Then we built the home, and it was handed over a few months ago. So the rental income was forecast at $700 a week. From day one, that investor received $950 a week.
So let me just give you some thought process here. Say how much deposit would this client have to put in to fund this house, Jeff?
So 10% plus costs, so say 80,000. Oh, say 90,000. Sorry.
Okay, so let's put it this way: $90,000 cash right now. You invest into shares. So $90,000, you've got to have the physical cash, and you invest into shares. So say you get 6% return on the share market. Say you invest in Jetstar or Virgin Airlines or Teslas or whatever share that you choose to invest in. Now, obviously, some of these shares gone up during the lockdown, and it's gone really down now because during the lockdown, a lot of us want to do everything ourselves. We didn't go to a professional. We got bored. We're at home. We invest in these companies, and the share gone really up, and we thought we've done really well. When the world opens up, next minute, all the professional share owners, they invest in somewhere else, they exit the market. As a return, even my own daughter, she lost like 40% of her money in Tesla shares. Now here's the difference: if you only use 90,000 to go and buy a house for 690,000, you're getting the capital gain of 8% on 692. That means it's called 700,000, so 87 to 56. You're getting a 8% gain on the total value of this property, not 8% on a $80,000 cash that you have to put into invest. So this is the reason why the house is worth now $108,000 more, because the gain is on the total value from the day that you sign for it, even though it's not finished, versus when you put cash into share market. That is something that we got to really realize here, that the property outperforms share, managed fund, and cash in the bank.
Yeah, really good point. And there's a reason why the banks on an investment property like this will lend up to about 90%. But if you're looking to borrow money for a share portfolio, it's probably around 50%. So, and that was a really good point to make about these the media outbursts about property markets collapsing and dropping. We've heard it since COVID. They've got it wrong every year. And the reason why the banks are willing to lend us up to 9%, they've got confidence in the market. If the banks didn't believe property market was going to, or the property loan for your particular property was going to be very strong, they wouldn't lend you 80 or 90% on this investment. So there's a reason the banks have done their research, due diligence. They look at the growth, the figures, the rental income, all those facts before they lend you the money. So, but just good real case studies, real data. So what we're looking now is a cash flow. So as I mentioned at the start of the presentation, I've been a long-term property investor. Always come back to focusing on the numbers. So on the left-hand side of your screen, we've just got an example of a typical existing sort of 3 or 4 bedroom house. in the greater Brisbane region, probably going to give us about 4 to 4.5% yield. That's about the average return. So on a $650,000 property, returning about $600 a week. Rental income, 30,000, a little bit of tax benefits, total income about 32,000, loan payments of about 33 plus their annual property expenses, which are the rates, insurance, property management costs, etc. So that property, based on that, is going to cost us about $9,000 per year, so $180 a week roughly. So we call that negatively geared, as opposed to a property on the right-hand side of your screen, which is one of these high cash flow, dual multiple income type properties, such as I've invested in myself. So the rental income on a $780,000 property is going to give you a $900 per week return, which is around about 6 to 6.2% gross yield. So rental income much stronger at 45,000, a much stronger tax savings. So with investment property, the ATO treats us as property investors like business owners. We've got great ability to maximize our tax savings. So on a brand new property, you can claim depreciation on the fixtures and fittings over the first few years of the property, which really helps our cash flow. So much stronger tax benefits. So total income of about 55, loan payments of about 41, property expenses 12,000. So again, rates, insurance, property management, maintenance, etc. So that property is positive cash flow by about $2,000 per year. So when you're comparing the two numbers, you can see the difference. Again, it really comes back to the numbers and focusing on the benefits and looking at the cash flow. Before we make a decision on a property, we really need to understand the cash flow. So this is just a very simple diagram or example of a negatively geared property versus a positively geared property, and why a lot of property investors are steering towards that positive cash flow type property.
And look, once you put a deposit down, you don't do anymore. The $309,000 gain on the previous property was made by who? They're not made by Jeff, because Jeff didn't have to do anymore, but the tenant pays for the rent and Jeff still get a positive cash flow out of it, except that after 3 years, the tenant has made him $309,000 capital gain. So if you are renting right now, your frustration has to be, no, I want to own a first home no matter what. At any cost, I got to own my first home, because I don't want to make my landlord $309,000. If you already got a house right now, you should say, I want to make my salary every year. You go to your boss right now, say you're on $100,000 and say, hey, I want a $30,000 salary increase. Well, I don't think anyone's going to give you that increase, except you work in my company. but you're going to get your salary increase every year. You go and buy one house. Think about it. 100% salary increase if you buy a property. That is crazy. And it's, I had someone in the weekend, he was selling Porsches, and he came to my coaching event, and they said, what's the catch? I said, there isn't any. Take action is the catch. That's it. Over to you, Jeff.
Yeah, very good advice. And on that point, Don, like really good if you are renting and looking to get into your own home. In Queensland, recently, the Queensland government really trying to encourage home buyers to get on the property ladder and get off the rental ladder, and increase the home buyer grant to $30,000, which is up from 15, which is massive. So anyone, again, looking for some help or advice, even if you're not quite ready, put a plan in place. Like Don mentioned about the coaching, start where you are, have a plan, or your goal is to buy your first property. If you don't own, put a plan in place. What do you need to get to that first property? We can help you with that advice and finance, things like that. Most important thing is to set a goal, set a timeline, and start taking action steps, whether it's your first investment property or whether it's your first own home. I've never regretted buying real estate. I only regretted when the times I've had to sell it outside my control. But, and most people will be the same. If we could have gone back 5 or 10 years and bought 2 properties instead of one, would have we, could have we, should have we? I think majority of the time the answer is yes. So positive cash flow property, there's a number of benefits with that. So obviously it doesn't affect your personal income, so you're not having to fork out money to cover the cost of that property. It helps you if you're looking to buy, build your property portfolio. So the banks, when they doing your assessment for your next purchase, they will look at your current expenses versus incomes. So the stronger the cash flow of that property, the more that'll help you in your borrowing capacity. So what to look for in a positive cash flow property? So we're looking for areas that have got a very extremely low, vacancy rates. We talked about 3% of standard, so areas under 2%. We talked about Southeast Queensland. Most regions are between that 1 to 2% currently. Properties with multiple incomes. So we've heard about the granny flats, dual incomes, co-living type properties where you've got more than one rental income stream. It's an absolutely fantastic idea. Built a couple of these myself for the same reasons. These properties are giving you a higher net yield, higher real money in the bank, as we demonstrated in that cash flow forecast, and properties with a bit of a unique factor, that extra benefit of that extra income. So fairly new concept here, which is really helping drive towards the rental crisis. The demographic we talked about at the first slide at the start of the presentation tonight, we look at the demographics. And what is interesting and what I've learned over the last 2 years looking at the figures is the demographics of most of the world, including Australia and New Zealand, is really changing. So the number of single people is really increasing as a percentage of the overall population. So a lot of people have come out of a relationship, or a lot of people not in a relationship, people moving from overseas as single people, and there's a real crisis for single room accommodation. So we've got a solution that's becoming very savvy with those smart property investors that are looking to, maximise their rental income. So we won't go into a too lot of detail tonight, but if you want to know more, you're welcome to reach out. So these are what's known as co-living properties. They are essentially a 3 or 4 bedroom house. Each bedroom has its own ensuite bathroom, lockable doors, own bathrooms, digital locks on the doors. The benefit with these is we can really maximise our rental income. So we could rent these properties to a standard family, like a standard family home, or if we're looking to do that positive cash flow, we can rent these rooms out individually. And we can generate about 35% more rental income from renting it as a co-living property. So this is just one example of a high cash flow property. And these can be built in most parts of Southeast Queensland. We also do a lot of other property types. So standard homes, again, if it's your first home, we can help you as a home buyer. If you're just looking for a 3 or 4 bedroom home to rent out in a growth location, if you're looking for a multiple income property, such as a dual income property or a duplex pair, we can build those purpose built. We have access to very good wholesale builders. I've built new myself many times. I've built new for my family and my staff as well, and had great experiences working with the good quality wholesale builders. Units, apartments, we can source as well. If you're looking to, what I've seen recently is a lot more popular is people looking to buy property in their self-managed super funds. Don touched on it about the investment in shares have been a bit up and down, and I've personally had a lot more inquiries over the last 6 months from people looking to buy property in their super fund. So you do need specialist advice in terms of a financial planner, which we can recommend. So if you're looking to buy property in a super fund, it works a little bit differently, but we can help you out with single contract properties suitable for those high yielding returns. So if you're looking for some more information and would like to have a discussion with myself on property, you're welcome to book a strategy call. So a couple of ways you can do that. You can click on the screen there on the QR code, and that'll take you through to my calendar, and you can book a one-on-one appointment, no obligation, no cost. Just have a discussion, have a questionnaire around what you're looking to achieve. And Lisa will put in the chat box, there'll be a link to my book a strategy call as well. So hope everyone's really enjoyed the presentation tonight. Got a lot of value out of the information. We are going to open up the floor to Q&A now, so myself and Don will be available. Thank you, Don, for attending tonight. I think that that strategy of wealth creation, learn from the experts, invaluable.
We will be coming to your city, and we'll be launching our wealth coaching program throughout Australia with Jeff and with our counterpartners over there. We believe that the education sector is like $18 billion. People pay for education, people pay for knowledge, people pay for coaching. While you got this coaching event here now, it's absolutely no cost to you or advice or with Jeff. Take that advantage because 2024, we will be very, very busy. So anyone got any questions, book a call, please scan the QR code I tried it earlier. It works pretty flash there, Jeff, I got to say. So good on you.
Thank you. That was with the help of Remax New Zealand. So this is building these partnerships. Individually, we're not as strong as a group, so that's why you have a team. Successful teams aren't always the best players, but they come together and play as the best team. We've seen it many times in all sporting industries where it's not always the best, most talented team that wins the competition or the game. It's quite often the team that gels well together. So we all have good, skills and expertise in certain areas. Hence the reason why I'm teaming up the Remax to give us that greater reach, that greater experience, and the technology tonight was brought to you was one of the benefits of working with Remax. So thank you, Don, and the team.
Actually, I got a very good personal news to share with all of you tonight. And obviously, this is my 30 years experience in real estate as a CEO of Remax New Zealand, community service, leadership, thoughtful skills. Forbes book in America, they somehow found me through internet. They research me, they look at my backgrounds, and they make a call. And for the past 15 months, I have signed a book deal with Forbes. And today, after 15 months, my book is now on Amazon website for pre-order. So who's on Forbes book right now? Well, I can proudly say Kim Kardashian is on Forbes. Warren Buffett's on Forbes. Larry Page on Forbes. Elon Musk is on Forbes. So now you've got Don Ha, all the way from New Zealand, the first Australasian person to be chosen in Forbes America to publish this book. The headline, the book title is called The Art of Exponential Success. So March 24 is my release date. And I'm just so honored for Forbes to chosen me, because in my lifetime, I don't think this will ever happen, but at least I now know one day my grandchildren will know, or at least my granddad's got a book with Forbes. So I will be coming to Australia. You will know about me in 2024. So that's the secret you get to know being on this webinar tonight.
Thank you, Don, for sharing. Exciting news. I read a lot of personal development myself, and we're always learning. So, and even if it's stuff we've already known and learned, watching again, going to one of Don's courses, you'll pick up the tips or remind yourself, hey, I remember this, and get you back on track. So it's just like training, sports. Listen to those experts, have a plan, and take, most importantly, like Nike says, just do it. Take action. That's what most important with property investment is, to have that plan, have that guidance, and then take action. We've got a question in there about the what's the next steps. Yes, so booking a strategy call. The link will be in the chat box there, or you can click on the QR code. I'll just go back to that and leave that on screen. So we're going through the Q&A, and then we can just book in a strategy call and discuss your personal requirements. Got a question there about location. So yeah, we're focusing really on the Southeast Queensland corridor. That's really the growth part of Australia, but we can source property in other areas as well. We have a lot of interstate investors seeing the benefits of getting into the Queensland market. The benefit with dealing with our team is we are property investors ourselves. So we believe in the product. We are investing our own cash into real estate. So again, when we talked earlier about taking advice, don't take advice from people that have said, oh, don't buy this or buy that haven't actually invested themselves. A few questions coming through, Don, which is great.
Now, I know that some of you guys are too shy to talk, so type as many questions as you want. Even you think it's a really silly one, because part of success is about asking the dumbest question. So I encourage all of you to ask any urgent questions, regardless of what comes in your mind.
Excellent. So we've got questions rolling through. So Louis said, well done, Don. Congratulations. Raj said, well done, Don. Thank you. Good feedback, guys. Prashant's asked about buying in bulk with other people, group. Yes, happy to have that conversation, Prashant. So just book a strategy call, and happy to have that discussion with yourself. We do have those arrangements. Thank you, Prashant, for your kind words. Great session. Yes, really appreciate your feedback. Siling's asked about the agent fees, depending on whether we're buying or selling. So the best thing, Siling, would be just to have that conversation. I know we've had a couple of conversations in the past. So it depends on the property, etc. So investors, you're welcome to give me a call, Celine, or send us an email. And I can
So just comment on that for agent's fee and service fee and whatever fee. There is no fees charged to you as a buyer. Okay, Jeff will arrange to get your finance for you, arrange a lawyer for you. If you're out of state, for example, from New Zealand, you fly over, he can even arrange to pick you up. You're from Sydney, you're from Melbourne, you fly into Queensland, Jeff will arrange all of that for you. We work for you first before we get paid. The developer pays us. You pay us nothing. Now you feel sorry for Jeff, you can buy him lunch or whatever. It's up to you. But I think Jeff is just too honest. He works too very hard for the deal. Now, I mentioned earlier, like, what's the catch? But you got to ask yourself what the catch is. But there's no catch. You got to try it.
Very good advice, Don. And yeah, and I do have, as Don mentioned, I spend a lot of time on the road, and recently had a investor that came to our Sydney event. We're in Sydney earlier this year, and I wasn't sure about the market and areas and that. And I said the best thing is to jump in a plane, come up for 2 days, make a long weekend of it. And we spent a whole day driving right around the southeast Queensland corridor. So that offer that Don mentioned, yes, it is a genuine offer. And if you're not sure about areas, I recommend that's the best thing. Come up here. I can take you to properties, show you the quality, the finish, types of homes, the areas, to make sure that you're comfortable with that. So I have many investors that buy, based on the bank valuation and the rental income, because the banks will not going to lend you money on something that doesn't stack up. So the first thing they do is do all their due diligence and research, so you're protected in that matter. But if you like the confidence of seeing with your own eyes, whether you're from New Zealand or Sydney, Melbourne, Perth, yeah, welcome to come over and we can spend some time. I love looking at property, been in property all my life, used to buy, sell, renovate, built new, subdivided. So yeah, it's very exciting times when you're seeing the growth in the property market, and seeing the demand and the growth and the returns. The clients that are getting these great results that we talked about, the case studies, that's very rewarding. When it's very hard to save money in the current, we're in a high cost of living than we've seen recently, and most people are struggling. But when you can show that rental income or that capital growth upside, that helps you sleep at night, helps you work that, yes, it was worth it 100%. And that formula did really work. And having that successful team. As Don mentioned, finance is really critical now. That's probably one of the most challenging things. So we have a really good panel of brokers that I've worked with for many years. And if you need help with finance, you're happy to help out. Queensland solicitors. So if you're buying property in Queensland, you have to have a solicitor that's registered in Queensland. We can recommend someone for that as well. So we have a whole team. Property managers, we didn't touch on earlier, but that's really critical. So if you're getting into property investment, property manager is hugely important. They're protecting your asset, which is generally for most people, your house or your investment property is your biggest asset. So I've had many property managers over many years and all sorts of experiences. And one thing I would say is, get a good quality property manager. In the Brisbane region, we have a relationship with the local Remax office as well, who I've got my own investment properties with as well. So again, we're not just recommending someone based on what we think. We're actually using these other services, finance, property managers, solicitors. I've used all those services myself. So again, just really big believer in having those quality people and those relationships. Now, the other big benefit of working with a team such as ourselves, you've always got somewhere to come back to. So if you're having a challenge, if you try and build on your own or get your own finance, or buying a block of land, you're having challenges, the benefit of working with us is we can come in and resolve that situation. So you've always got someone on your side. Very important for construction. We do only work with builders that do turnkey fixed price. So before you sign anything, before you engage that property, the figures up front, what the total cost of that property is, which is very important in the construction industry.
Now, when I was 26, I joined real estate, and the question was how much you want to live on when you retire. Okay, so I decided that when I'm 50, I want to live on 200,000 a year. So I did not know that property will double in value every 10 years. All I knew was I had to go and buy 20 properties. and that was rented for $200 per week. And if my mortgage was for 25 years, when I turn 50, I will get 200,000 a year in rental income. That's all I knew. I knew nothing about rent doubles in value, property doubles in value. All I knew was I got to go and buy 20 properties that will give me 200,000 rent a year, and that will be more than 25 years. When I turn 50, that's it. So I'd like to fast track forward. Today, I'm 55 now, and my rental income is not 200,000 a year. My rental income is like 1.5 million a year. So now I want to get to 2 million a year in the next 24 months. So there's my story. And if you ever need money, okay, so say if you got one house, you only own one family home today, and you need say 100,000. And say if you rent a house, well, you've got a worse situation because you can't find 100,000. You got to find by cash. You don't have cash, you stuff. You have emergency. You have nothing. But if you own your family home, then at least you can mortgage against your family home, or you can sell your family home for whatever reason. That's so emergency. But if you have three homes, one family home, two rental home. If you need 100,000, for example, the slide earlier, Jeff made 309,000 on one of his homes. Well, he can turn around and he can sell one or two of those homes off, and he can work out at 200,000 or 300,000, and he doesn't even have a job for the next 2 or 3 years. It doesn't matter because you've got 300,000 to live, to fight, to get your mental state in normal space. So having multiple properties is your measure of protection when crisis comes. That's what my personal experience did for me. And yeah, I'm not worried now that 3 of my properties vacant. I'm not worried about even 5 of them is vacant because the other property will carry it through. But if I sell one of my property off, I could work out 1 million, 2 million, or 300,000 or 400,000. So life is great if you keep on focusing on it. Now, it will not happen overnight. It will not happen in 2 years. It will not happen in 3 years. It will not happen in 5 years. But as long as you keep focusing on it, once you hit 5 years, 7 years, 15 years, I can promise you, however old you are right now, you will never go back to that old you. It's not the same anymore. It's great to become the new you, but it takes a small increment steps. That's all it takes.
Now we've got a few comments coming in. So Raj has asked a really good question, Raj. Does the inner Brisbane market have good growth, or is it more the outer suburbs? So really good question. So yeah, generally the growth, like any area, starts in the middle of the cities: Sydney, Melbourne, Brisbane, Auckland. It started from Auckland, then it spread out to the regions. So what we inner Brisbane has seen some very, very strong growth. So what we're doing, Raj, is recommending targeting these areas in the outer suburbs that are going to see that, starting to see that growth now, where it's a bit more affordable to buy, and the growth is coming into those areas. So Queensland's traditionally been less apartments, more sort of houses, but it is changing as the demographics changing, Raj. So yeah, the growth is forecast for the sort of greater region. Louis got a great question on the impact if the Olympic Games, a question around if the Olympic Games were not to proceed, what do we think, would the market still be strong enough? Yeah, absolutely. I think you know, the Queensland government's already been tested with the Commonwealth Games. It was very successful. It all went pretty smoothly. It was a great spectacle. A lot of people really raved about the city. And the fact that we're, you know, committed to the Brisbane Olympic Games in 9 years' time, everything, the state government spent a lot of money. Understand what happened in the Victorian government was a very, you know, challenging time when they cancelled the Commonwealth Games, but the Brisbane market seems to be back on track. But it's more, most people are coming here, Louis, not for just the Olympic Games. They're coming here for the lifestyle and affordability. So traditionally, Brisbane's been much more affordable than Melbourne or Sydney. Now we've got lots of work, lots of employment, wages starting to increase, and the cost of living, cost of housing is less than those other 2 major capital cities, which is really what's driving this population growth, this interstate population growth. And now a lot of overseas immigration what we're seeing coming into Australia, where it traditionally went to Brisbane or Sydney or Melbourne. A lot of that percentage of that's coming into Brisbane because of the words really got out right around the world about the Brisbane. But I think the message of the hosting the Olympic Games has spread the Brisbane message right around the world. So I think has been a positive, Louis.
So, well, Jeff, right now we have 19 people still on this webinar, so it must be really interesting session. But I got to sign off because it's 10 p.m. my time and I've been talking all day. But firstly, I really want to thank everyone for participating on this webinar. Thank you to Jeff. I only ask for one thing at no cost to you. Please give us a feedback on what you get out of today's session for what we present to you. So that we can learn from you and we can improve on it. But if that's the only thing that I ask from you, can you please be kind and send in the chat and just give us a feedback. If you book a call with Jeff, please book a call with Jeff because he's really knowledgeable. And then I'm looking forward to meet you all one day soon. So all the best and thank you very much.
Thank you, Don. It's been a real honour. So for anyone that's not aware, it's 10 o'clock, 10 p.m. at night in New Zealand time. So talk about people working hard and committing to helping clients and working in the property industry. We are, I think Don and myself are both driven by that, that pleasure that we get out of the game, and we are very committed to our clients. So thank you, Don, for being available for such a late night, and really your insights and information and story, I think, can inspire many, many people.
Looking forward to see you all soon. Good night.
Thank you, Don. Now, just before we wrap up and end the webinar, there's Noel's asked a question. So any last questions, please flick them through now before we end the presentation. So Noel's asked, what's your recommendation for a property investor wanting to meet new contacts and network with key people such as property managers, solicitors, etc.? So again, speak to people that are actually using these services. Noel, that's what I would recommend. If you are looking for help in the Greater Brisbane region for those types of people, you're welcome to connect with myself. And as I mentioned, I've got investment property in the region. I've gone through finance and used Queensland solicitors. So if you need help in the Queensland region, reach out to us. If you need help anywhere else, I also have a lot of contacts and now within the Remax group right around Australia. So if it's not in Queensland, you're welcome to call out, reach out, Noel, and I can see if I can help you with advice. Thank you for that. Thanks, Raj. Appreciate your kind words. Thank you, Noel. Thanks for all the kind words and information that everyone's presented tonight. The questions that have come through have been great. So I hope it's really given everyone an insight into the property market, and especially the Southeast Queensland corridor. Some very exciting news over the next few years, and that gives us confidence going forward in the market. So a lot of opportunities there, but opportunities will only happen if you actually take action. So yeah, just before I close the webinar, please grab that strategy call QR code or go in the chat box and grab the link there, and then we'll end the webinar. I look forward to meeting you on a Zoom call or a phone call. We're also planning live events next year. We got to Brisbane and Sydney this year. We're expecting to travel next year into Melbourne and other areas as well. So look forward to meeting you, and have a great Christmas and break. And this is a perfect time to make your plans for 2024 and beyond. So hence the reason hosting this information evening tonight, to share with the data, the key information, and inspiring everyone to make plans and for this time of year for going forward into the next few years. So have a great evening, everyone. If I don't connect with you before Christmas, have a great break, and looking forward to speaking to you at some point in the future.